All right, cool. All right, so let's take a look at. Okay, so this is a Japanese yen index, but we're not going to take a look at that today. We're going to look at the dollar. Okay, so basically, right, we have these highs here that never really got tapped, but this is so long ago, right? So I mean, the market doesn't really look so far back, like these at this point, these zones are just kind of, consider the fact that this is a monthly time frame, right? So, you know, at the end of the day, the monthly still has relevance, and these zones that it creates, like for example, we had a huge order filled here, that this was a huge order block, right? This was where the banks took that sell, right? And then they
I
bought
can't
back.
see it.
Oh, it's not sharing a screen?
No, I'm not seeing it at all.
Let me click share screen. Oh, I'm such a fool. My bad. Okay, now we can see. My bad. I'm sorry, guys. I clicked share screen, and I thought that it was working. It wasn't. There we go. My bad. So again, sorry about that. So here exactly. So we had that huge order block, right? That we left behind in the past. Again, this was that those cells which were converted into buys down here, leaving behind it another order displacement. We then started to move up really rapidly. Why? To come and mitigate that order block. And what is mitigation? Very simple. Because this is think of it this way: the banks are moving price up, and from their buy position that they had down here, right? There was buys taken down here, which then were converted to sells, but because they were selling, they had to come back to mitigate. Now, what's happening now, right? So now that we've closed out that order and failed to make a higher high, and look at this now. Now let's zoom in on the monthly time frame. Now look what's happening here. Huge institutional sell candles, right? We left behind a pretty small imbalance, but look at this, right? We moved down lower once and twice, and so it looks to seem to some people like, oh, this is let me see, this 90 level, right? It is this very strong, this 89 and a half, 90 area, this kind of this entire support box, you want to call it, whatever. It seems to be like an area of support, but as smart money institutional traders, we know that this support level actually has a ton of liquidity. And when we see equal lows such as this, right, we actually know that this is, in fact, let me just label that as an equal low. Right, when we see EQL, that means equal lows. What does equal low means to us as traders? Gabby, I'm gonna mute you. I'm sorry, because I don't want to put any background noise, unless you're gonna ask a question or something. These equal lows that we're generating is actually a liquidity pool. And what does that mean? That means that the market is going to target this. So we're actually, in my opinion, if you think of it this way, right, we have a pretty big imbalance. And I mean, the fact that we failed to make a higher high here, I mean, also the fact that we closed this mitigation, to continue that sell that we were in, right? So the market moved down really rapidly, right? We moved up to sell, moved back up very, very slowly, really a grinding market, right? Just to, why did it do this? Again, to close. And look at this, look at this candle. Look at this huge order that was placed. This whole thing was just to close. And then look at that, it closed back down, failed to move up, and then just dropped, continuing the trend. Now, but what's happening here, right? Now, we are studying the market. What's this? Shit, sorry, thought I was muted. You're all good, don't worry. Now what's happening here is that, well, I was watching yesterday a video about talking about the current economy and stuff. Basically what's happening is that the Federal Reserve, or I guess the US, has something called the United States General Treasury. It's like a checking account, okay? And they have a ton of spending that they needed to do because they had over $1 trillion in that checking account, and that's something called a debt ceiling, and they were reaching the debt ceiling. So they needed to reduce from the checkings account, just for simplicity, to keep it, in balance. And what happened with all that spending, they're investing it back into the economy. And that's, also why we're seeing inflation, because the Fed is printing that money for the government spending. They're not taking it from the economy. They're taking it from the Fed. So it's kind of like a catch-22 type of thing, where if they're spending the money that they're printing, and then they're and then they're making revenue off of the taxes, the initial source is not from the economy, and it's just kind of generating this little cycle. That's why we're not able to break below, because the economy is just like, they're trying to stay put. But we've been expecting this drop for a very long time. I've been talking about this. People said I was crazy. I'm talking about this for months, right? I mean, this has been, ever since really here. I mean, take a look at this. The market doesn't lie. put aside what I'm saying. Look at the market, right? I mean, we had these up moves, right? Those up before the down moves, leaving behind an order block. We came close out the 50%. That subsequent enroachment, right? That mitigation, if you want to call it, goes by many names. Came mitigated. Look at that. Let me zoom in on that real quick. Mitigated that 50% of that order block to move down again. What did it do? Left behind another order block. What happened here again? Came to mitigate. So if you look at it, it's really making a propulsion block type of deal where it's propulsion in the downtrend, right? Again, really strong institutional sells that were taken here, really pushing this market, creating an equal low, appearing to the money as support, but in fact, this is actually creating a level of liquidity because there are stop loss orders here. People that are buying saying, oh, if the market comes back down here, I'll get tapped out because this is a level that held twice. Exactly. So it makes sense for the composite man to sell into these stops, into these stops and sell stops, right? To target that sell side liquidity, as well as the fact that there's huge fair value gaps, right? I mean, we have here. I mean, just balances that do get filled here, right? Slightly, this imbalance did get filled, but we still have imbalances down here. We still have sell stops resting below, and we have order blocks that never really got filled and never got closed. So, definitely looking for sells because I mean, if you take a look at this too, right, that we had a buyer's failure. Buyers failed once, buyers failed twice. And it feels like this little support we're making is going to be very much sold into. I'm very bearish on the US dollar, guys. I could be wrong, of course. It could always be wrong, right? And if you take a look at the weekly structure, right? Let's take a look at that just to clarify my position. I mean, it does look like it could continue to run up, but I want you to take a look at this too as well, right? Again, we have the order block, the mitigation. It's just closing in a way that doesn't seem very strong. I don't think there's much strength left in this. I do believe that that sell into those sell stops down here would be more logical, especially considering the institutional order flow that we are currently seeing, as well as, I mean, just look at this, like, look how the markets is grinding up, failing to make a higher high and just dropping right back down. It's really weak, guys. Consumer confidence, right, is at an all-time low. There's a lot of job openings, and this is the time where most people are unemployed. NFP has been really bad. We've been receiving a lot of bad news on the dollar. So, I mean, I'm really not bullish on the dollar at all. And I think that, I like the fact that the only thing that's kind of concerning to me is that this demand zone that was down here, this area of congestion, this Wyckoff accumulation, whatever you want to call it, got reached once and twice. Equal lows are never a good time, and now we're making equal highs. So we're kind of in a range bound situation where, I mean, we did have a really big sell to the upside, but it did leave behind as well a fair value gap. We have areas of demand down here, and we have equal lows. It just seems more likely than not to me personally that, especially that we're making the slope down. I mean, we're making a hidden trend line here, and if you guys use Gartley patterns, harmonic patterns, this is making a harmonic pattern right here. I don't use that shit personally, but I don't want to say shit because I don't really hold the relevance to it, but some people use it. This is making a harmonic right now too, which if you want to take a look at the trend line as well, it's also making a shifting downtrend. Now, I'm not saying trade within the trend because trend lines, the market doesn't respect trend lines, right? It's all imaginary. It's not how it works. But just to illustrate, the shift in momentum right now, it looks like it's going to be going down, right? That's, personally, obviously, we could see a run up. And then at that point, like if we're going to see something like this, a potential run up, you want to wait for that trap, right? People to sell short and then go for that long, right? So we could see something like that, come back to close out these orders of these sell orders up here. I'm not saying it's impossible. It could be possible, but again, you really want to wait for that trap entry, that failure to make that lower low. At that point, creating a higher low. At that point, you're in an uptrend. You enter on that low, on that trap low, just below the trend line, and then you take it up higher. So that's a potential buy situation that you want to look for. Then you always have the potential. So that's potential. That's situation number one. Again, this is on the month. This is on the weekly, but just keeping that in mind always on the higher time frame because this is higher time frame analysis. Obviously, we would look into the smaller, but using a high just to keep it short, I would say HTF because HTF is quicker. If you're always looking at the HTF, then you know that direction-wise, bias-wise, where the market wants to go. Again, I am pretty bearish, me personally, but you always have to prepare for the what if possibility. So we could see some kind of trap low here, failure to move back up, and then some kind of, it could go a number of different ways, right? This is a very classic pattern here, where where it goes down, convinces people that it's a sell market, people are selling, grabs their order, and then people are buying, comes back down again to mitigate that 50% of that demand zone, that mini demand zone that we created. People are selling again. People think, oh, it's gonna go back down. Then it just takes out their stop losses, right? So again, very classic pattern. That really nice zigzag pattern that the market loves to do. That's many different buy potential opportunities there. And then there's the obvious sell market situation model, really, where we have those sells from up here really bringing us all the way down. And you can say this was the absolute low, and now we're kind of making a bounce back. It could go a number of different ways, but it could also now really significantly drop into those lows and then really start to take out this. It could go a number of different ways. It seems like we are in a little bit of a range bound market situation. We're kind of just ranging from this range high to this range low, and we're just kind of inside of it. So, any potential breakout would have to happen really soon. And these equal lows that we're making, it just seems like the pressure is more so on the downside than it is to the upside. Again, that could change, but we really need to see good PPI numbers, CPI numbers. NFP needs to really be good. It's just we're not seeing those numbers, guys. So I would definitely really want to keep an eye on the news, keep an eye on the economy, learn about the economy, learn about the reverse repo rates that are really an all-time high right now. What that means is that the fact that the banks are borrowing from the Fed, right? Because there's no more collateral left, because the Fed has so much money that they have no more collateral to give. So the banks need collateral. So the banks are borrowing from each other. It's creating this kind of situation where now the economy is kind of in a state of uncertainty. Like I can't predict exactly where it's going to go. We had this explosion in price, right? Where was that? I think it was here. This was, this explosion here in price up was because of the rate hike that they decided for 2023. But look, even that, still take a look at that price action, even on the daily here, just to really illustrate why I'm so bearish. If that's not enough for you, right? Again, we would need to see a break below this midpoint here for us to know that this is in a downtrend. So at this point, I wouldn't be selling just yet. But even if you take a look at the daily, huge imbalances, never got filled. We have a fair value gap. We have areas down here. Yes, there was Wyckoff down here, right? That's selling climax, automatic rally, secondary test, the spring, the last point of supply, and the move up, the last point of supply testing this is the last point of supply, and this would be the the test to that LPSY before the markup, and then we had the markup. But just take a look at that markup that failed to kind of really push up. Now we're moving back down. It looks to be bullish, right? But you never know, right? You have to be careful with this. So definitely looking for this area to be reached right now down here, this order block that we had. I think it's going to be probably this one down here that never really got filled. That's a very small order block on the daily. I want to see this get ran and then see how it reacts to this. And this is really where we're going to see, right, how it's going to happen. Like if we're breaking below this, guys, we know that this is going to break, right? If we're breaking below this level, that's going to be a sell for me. But if we're able to, with come down, break a little bit below, and then maybe do some kind of move back up, again, we're going to be watching those numbers very carefully, and I'm going to be keeping an eye on the charts. But again, how does that correlate to us knowing where the dollar is going to go? Let's take a look at the yen, and now you can use the yen to determine the bias. So we have a potential buy side situation and a sell side situation, right? That's always the case. Is it going to go up or down? Nobody knows. But if you use a correlating market, you can get a better assumption. Now, let's take a look at the yen, right? Now, we've been watching the yen for a very, very long time. So let me show you guys on the monthly what we're looking at here, okay? So this was a Wyckoff situation that we had. This is a pretty textbook Wyckoff. We had that, again, the buyer's climax, automatic rally, secondary test, the secondary test in phase B. That's stealth that smart money does with the spring move. Last point of supply entry, the markup, right? Again, this came to close out that order block that we had up here, right? As we came to move up to mitigate, and now we were in a sell situation as we sold down even lower and lower. Let me just put you guys here. So now we're in this situation where, we really moved down. And what happened here? Another order block that came, got tapped to the pip. But look at this, on the move up, left behind a fair value gap. What is that? It's an area where the market did not have any outstanding orders. You see how the way I explain it to my students in mentorship, which I'm giving now for free because I don't really care anymore. If you want to join the mentorship, it's available. If not, I don't really care. You can keep watching these free content that I'm producing. The market moves in a way it's a chain, right? In the sense that, if you're going to have a weak link, the whole thing's going to fall apart. So the market likes to come, right? And you see how this move happened and just left behind all these orders, comes and fills these orders. And then look at this, huge imbalance, comes and fills it again. Now this left an imbalance, what did it do? Came and fill it. So it always comes and closes itself, it closes the link between the chains. So now this chain move up doesn't have the wick, doesn't have a link to it. This area is open, it's undefended. It's a weak spot, right? In the composite man's move up. So the market now, I believe, wants to come, maybe correct that, maybe close out this order block, and maybe leave behind these order blocks, maybe come and close back this unmitigated order block down here and down here as well. This is a huge order block that it left behind. We have small order blocks inside. So we have huge areas of demand down here that have never been tapped, have never been mitigated, but here's the thing. These were recently formed order blocks, and we have order blocks resting here above and up here too. So, I think that right now, I think that even though we have these mitigations, I think that potentially speaking, we would see maybe some kind of move up right now. Because, let's take a look at this reversal, right? Really moved up now, and now people are convinced to sell. I know we have these areas down here, but I do believe that at this point, I do think it's possible to maybe reach that above the 80 threshold and reach up this area of demand again, because look at this too, right? We had this area that didn't really get filled. Yes, we did have this area, this thing kind of wick into it and close it. So I guess it did get filled, right? If you think of it that way. So it kind of left behind an area down here, which never got filled until now. So you're in a pretty problematic situation because the area that was up here got mitigated. So now you only had one order left behind, which was this, to sell the market. Because look at that up move before the sells and really came significantly lower, leaving behind that unbroken link, right, that I'm talking about. So if it left behind this unbroken link, I guess if that's a good analogy for you to understand. If that's not a good analogy, consider it what's a better understanding of it? Like a circle, okay? You have half a circle, but you want to complete the circle, right? So again, it's like a cycle, I guess, if you want to think of it. So these cells needed to come and get closed because the market took us, the composite man took a sell position here, but before it was a buy. So those buys to sell, he has a losing position here. He has a losing sell position, so he has to come and close it before he can continue on the moves down. So, now that we've closed this position, it makes sense that either we could go up and maybe close out these orders up here, but I don't really think it's likely. Even on the move down, right? We moved up, we came, mitigated it. This was a mitigation, came back down. We came kind of here again. We made these relative equal highs. We have liquidity resting above these areas as there's an area of imbalance, right? Take a look at this fair value gap that we had, never got filled, right? To this day. Take a look at from this wick to this wick. We're going to label that FVG. What is FVG? Fair value gap. So again, now we're taking a look at the yen on the monthly. So we have an area of imbalance that the market has not reached and filled at all, right? We have areas, we have this demand zone or this order block, whatever, or supply zone, whatever, it doesn't really matter, right? That never got filled either. So I'm just taking a look. I'm doing this with you guys. I'm showing you guys how I analyze the markets. This is how I read the charts. So now we have, this area here that we're looking to target, as well as the fair value gap. We're already making those moves up. So we're in a pretty delicate situation where, on the one hand, I would like to see, well, I think we can delete this. This is not a relative order block anymore. I'm looking potentially to see, a rise up back into these levels, but it needs to be coupled with the dollar. So again, we have enough reason to go down, again, to close that fair value gap. We're already starting to dip down. But again, take a look at that monthly candle going up. Let's take a look at the weekly. Let's see what's happening inside the week. So again, we're moving down, really piercing this low and then failing to move down. So we're having a seller's failure. So perhaps these recent order blocks that are created are kind of like the, okay, we're going to get to that. So think of it this way, right? So these levels down here were, okay, we're going to create these areas of unmitigated orders, but right now we want to take the market down lower. So that's number one, right? So now we're seeing these sells taking place. Sorry about that. We have these sells taking place, right? And the market is saying basically, okay, so we're going to take these sells right now and we'll get back to them later. So we have these areas that we know have never been closed. And now these are the new areas that have been created, right? So this is like so think of it kind of like you're playing baseball, right? And you have two teams, but there's no one is pitching and one is offense and one is defense. It's not like that. It's like both of them are kind of offense. It's like swing high and swing low. So they're hitting it, they're hitting the ball down, and now the down is hitting it back up. So it's like the momentum. I know it's kind of complicated and it's a really bad example, but I hope that makes sense. I don't know if you guys can mute yourself or text in the chat. Like, do you guys get what I'm saying, or am I like talking nonsense and you guys don't understand anything? Like, I don't know if you guys are relating to what I'm talking about here. Like, this is like the push down, and now this is the push up. So because this is the most recent point where the market turned around, this is the least likely level to get filled. Does that mean that it won't get filled? Of course it will. Why? Because we have two unmitigated order blocks. We have a fair value gap. We have a lot of reason to come and test down these levels. And I'm not saying it's impossible to test down these levels. I'm just saying that, coupled with the belief that the dollar is going to go down, especially if you take a look at the weekly, I mean, it just looks to me like it's more likely to move down than up. If that's the case, it also makes sense for the yen to be in a buy situation. So, using the high time frame analysis, we can be looking for bullish sentiment on the yen, right? So especially considering the fact that we have a bearish and outlook on the dollar, we can couple that again with the yen moving up. So the fact that we grab this liquidity down here, fail to move down, and are now kind of making a higher low, right, shows that this might be a little swing, and that this accumulation down here is a short-term, a long-term target, and now the new target is these fair value gaps that we left behind, and this area of how's it called? Of demand. Or wait, no, of supply. Supply is up and demand is down. I always get confused between the two. But yeah, this is like an area that is unmitigated. So you're always looking from bank order to the next. You're looking for liquidity. Again, where's liquidity? Resting above these equal highs, resting above inside of this fair value gap, resting inside these orders. The market is now on its move back up to close this position and then maybe move back down and then take out these orders down here. That's what I believe. I could also be very wrong. It could also start moving down significantly, right? Because we are also in a very bearish trend that we cannot ignore as well. It's actually fucking disgusting and atrocious how disgusting this trend is. Look at that, just totally moving down here, right? It does look to be moving down, but we do know something about trend lines that most people do not know, is that when there's a trend line, we want to see the liquidity being targeted above. So we have another so what does that mean exactly? So people are going to be selling, right? People are going to be selling at resistance at this trend line, but in fact, creating their stop losses. The market's going to sell into those stop losses. And at that point, we're going to be moving significantly higher, taking up this fair value gap, and then maybe reaching obviously along the way, there's going to be dips. It's not going to be, I hate this drawing tool. So it would be something more like, in my opinion, right? It would be something like this, like it would be like a sell situation at first, then it would be a buy, it would buy into the stop losses, then it would be coming back down, then it would be going back up again. And then, it would be something like this, and then, maybe reaching up there one day. Obviously it's not perfect, right? But that's kind of my outlook on the yen, which is coupled with the fact the dollar would be, in my opinion, right? I'm not going to call it. I'm not going to say this is what's going to happen. I'm just saying that, this could be many different examples. Like it could be that trap entry that we showed you earlier, where it would go up and then give you that trap, and then it would go back up again. Then you have to buy in, and then you would know it's an uptrend. Again, we have enough suspicion as well. We have those areas of supply up here that never got tapped. The market could go back up, but it just makes sense for it also to go back down and take out these lows that never got filled, because this is the recent point. This is, again, that swing that we're talking about. This is where the market kicked back down now, and this is the most recent kick. The kick up was so long ago that I feel like it wants to come and test that kick again, not the recent kick. You know, so it's like a, I don't want to explain it. It's this, it's either you kind of understand it or you don't, you know, I don't really know a good analogy to use. Just this was the recent area that was kicked. It came to close, closing the chain link, if you get what I'm saying. So now we're in this situation where it's just gonna come back down, you know. It just makes more sense to me than to go down for it to go back up. Doesn't mean it can't, just means that well, I'm looking at a sell situation here on the dollar. So that means I'm looking at a buy situation on the yen. So the fact that I'm bullish on the yen is actually showing me that this is a very short term. I mean, take a look at this on the monthly too, right? Look at the monthly for 1 second. Let me delete this. Okay. If you look at the monthly, what is this? Up. That let me draw for you. Tell me if you guys start to agree with me now. Make sense? Or no, not yet. Those weekly,
Uptrend.
daily, hourly, 4-hourly, 8-hour, 5 minutes, 1 minute, they're all coinciding with the larger market structure, which is sells to buy. The second you start to fucking realize it, you're like, oh my God, like it's so obvious. Like, isn't it? You guys, like, you see it, no? Like, don't tell me it's just me. What is this? Makes sense. Thank you.
Yeah, I
It
agree
makes
with
a
you.
lot of sense. What'd you say? I couldn't hear you. I'm sorry. What was that
No, I
again?
was saying, yeah, I agree with you. It
Oh,
looks like it's in a
got
strong
you, got you.
uptrend.
Yeah. I couldn't hear you, my bad, bro. But no, it's very like when you really zoom out, right, on the monthly, and you're just looking at it, you're like, oh, like it seems so simple. Like, you know, and we're sitting here breaking our heads, like, is it gonna go up or down? What's gonna happen? Like, and you're just looking at it, and you're just like, it just makes a lot of sense when you really just think about it for a second. So I'm very bullish on the yen, right? So if that's true, then I'm bearish on the dollar, and the bear side makes a lot of sense too, right? I mean, take a look at that. Again, I'm not a guru, and I'm not gonna say that, oh, I know exactly. I'm on ICT, or you know, I don't know if you guys know who ICT is. He's always like, I know where the market's gonna go. I know everything. You know, I hate watching it, but I'm not gonna say I know where everything's gonna go, but it just makes a lot of sense for the sell to happen. You know, I really see those big red candles, like, oh, just all ready to get formed, you know, like you can almost see it. Like I'm talking about this kind of thing, like really just fucking selling into those sell stop orders down here, taking out these fair value gaps, taking out these lows down here. Oh, I can't wait for that day. The dollar is going to collapse. The economy is going to kick a shit, right? It's gonna, I mean, obviously I'm not waiting for it. It's a terrible thing that our nation is going to collapse like that. Guys, you understand that we're talking about a financial recession right now. 90 is the support. If we're going to be breaking below, we're going to be in a huge economic crash. Like, I don't know if you guys understand what I'm talking about here. Like, this is going to be really bad, you know? Like, this is going to be like 2008 type shit. Like, it's not going to be good. Like, I mean, you know, I have friends. You guys are probably from Prime Time Trading, right? Is that how you guys know me, or you guys just found me? I don't know how you guys know me. Where
Yeah,
you guys know me.
from prime time.
Right. So, you know, I'm friends with Elliot and Jacob and the owners, and I talked to Percival, and like, you know, people are talking about a big market correction. You know, people are talking about a market crash that's going to happen, and I think it's just, you know, this is what we're talking about here, guys. Like, don't be oblivious. Like, keep an open mind to this stuff, because if this is going to happen, like, this is going to be, that's what we're talking about here. This is going to be the correction. The dollar is looking to drop. I hope it doesn't, right? Because I mean, again, it would be very catastrophic for us as people living in the US, but it could happen. Let me take a look again at the daily here on the dollar. I mean, I don't know. I would really love to see this level hold. I don't want to see it happen, but if that happens, then you know we're going to be very bearish. If we see that that 90 area get attacked real quick, which is definitely what it seems to be doing. I mean, those sells look like those buys are going to be to sell. This might just be a lower high, and then it could bounce back up. I don't know, you know, I don't know what can happen here, but you know, I do know that there's a big fair value gap here, huge monster. This is a huge level that needs to get filled. It can't just run up like that, you know. And this came to close out this mitigation. We had this excuse me, sorry. We have this order block that kind of just got filled. You know, they tried once, they tried twice, but also left behind equal highs. So we might be seeing potentially maybe the grab of liquidity as people are selling. They might be like, if you learn smart money, learn about liquidity, then you know that, oh, equal highs. So, if that's the case, let's label that real quick. Let me delete this. Let me get that out of the way because I don't want that anymore. Sorry about that. Sorry about this, guys. So let me just label that equal high. So if you know anything about smart money theory and liquidity, you know the equal highs are going to get targeted, but we also have equal lows down here too, right? That we also can ignore. So we're a little bit in a situation where we're just in a range, very clearly. I don't want to call anything, but we could see this area get purged. Again, let me just annotate this chart real quick for you guys. So again, we have that fair value gap, that F. Oh my Lord. No, let me just fix this. Ugh, I hate trading. Okay, so again, we have that fair value gap that exists that we know that we talked about just now. We have this area that got attacked. So again, on the one hand, you can see it as a buyer's failure, right? As the buyers try once to close out. We came back up to close this order block. We failed to go down. We're trying back up again. We're going back down. We're just kind of in this ranging situation where, yeah, it's just hard to tell. I would really need to see what's going to happen here. I want to see the market come back down. So I'm not going to be, taking any trades yet. I really want to see what happens when the market reaches this level. Because again, I'm not a guru. I'm not going to predict where the market's going to go. But these next few days are really going to determine the future of the dollar. Because if we're going to be breaking below this low, then at that point it just makes sense. But again, we have equal highs up here too. So we know that, again, when we see equal lows or equal highs, what does that mean? Liquidity pool, right? This was a liquidity pool that we talked about earlier. So we also know that on the short-term liquidity, we have very nice amounts of sell orders up here. I mean, stop loss orders and buy stops above here, right? Because again, people are saying, oh, if it goes above here, my buy stop will be activated. So maybe the market could do something in the sense of come back up, grab those orders, stop these people out, and then come back down. That can happen, right? We could see that. It's called a trap entry. That's called a trap. We could see that very, very clearly. It could be very, it could go like that. Really, it could. But it could also not be like that. It has many different opportunities. It could also just straight up come back down. We're going to have to really determine where it's going to go and really keep an eye out. When I say determine where it's going to go, I mean in the sense that keeping an eye out and seeing where the market's going to go. And then at that point, we can formulate an assumption. If you're going to start breaking above, and then we're going to see some kind of stalling, we're going to see a wick up, sell, right? If we're going to see just a plummeting, selling below, wait for that pullback up. So if we see the sell situation, right, we're just, from here, totally just fucking collapses, then comes back up. That's a sell. That's a sell. That's an optimal trade entry, and you're just going to sell into those stop losses, into those fair value gaps, and into those order blocks, into those equal lows, into that liquidity pool, and just hold that thing forever. So again, we're in. Again, that's sell situations. I think that this is the more likely opportunity because, again, we have the equal lows and we have the trend down. I think that the market's going to come, grab those orders, and then move down. Actually, that's the most likely situation, in my opinion, in what I know about trading. Because, again, short-term liquidity always gets grabbed first, and then the long-term liquidity, long-term goal gets put second. And that's, the market's direction. So it's kind of like, it's just kind of like a fake out, It's like let me convince you guys it's a buy and then just juke you out and then go the actual way I want it to go. So, that's really what I'm thinking of. So it's going to come back down here to the supply zone, grab, fill out that order, move back up. So again, we are going to move down. So it is going to come back down here. So I'm expecting this level to get tapped, maybe somewhere, up here, somewhere around this area, get filled. And then from there, bounce back up, grab these orders real quick, get up around here somewhere, and then just collapse. Again, I could be very wrong, but it would have to really convince us, because if it just shoots up like that, then we know it's being manipulated, and it's just to grab these sell positions to then sell. I mean these stop loss orders. It's gonna grab these stop loss orders and then sell from there. That's what I meant to say. Sorry. But yeah, that's really what I'm looking for, on the dollar. So again, very bearish, just, even on the daily, just makes a lot of sense. We have that larger time frame analysis that we just did with you guys. Just makes a lot of sense, both of you guys said you understood. And I'm very happy that you guys understood. We have 5 minutes left here, so just ask me a few questions, if anything, if you guys wanted to ask something you didn't understand. And if not, then I'll just end the stream and I'll upload it to YouTube if you guys want to watch it again.
Hey, is there like a area where you have like Forex 101 for
Like a
beginners?
mentorship? Yes, I do that. I have one-on-one sessions with students. I have well, again, I took a really long break, so I don't really have students anymore, but I was doing that. Are you interested in doing a one-on-one session with me?
Well, not really just one-on-one sessions, but like a beginners Forex, so you can just learn the basics.
Oh, you're asking me like oh, I don't want to do mentorship. Like, could you recommend me videos to watch type shit? That's what you're asking.
Right. So we can like
okay,
learn
bro.
how to get it.
Yeah, I got you, bro. Let me show you. Oh no, that's some price action stuff I watched. Let me show you my channel real quick. I can send this in the chat if you want, but I have a lot of videos that I would recommend for you to watch. If you're new to Forex, definitely watch Forex Introduction Basics. And then, obviously watch this video again. I have a lot of videos that you could watch. I would start off also watching MentFX is good, and ICT, very good. If you're looking to just learn about like what Forex is, again, really watch this introduction basics. There's a lot of videos on YouTube that talk about, intro to Forex, and the best one by far is my video. And I'm not because I'm biased, like literally the information I put in there, bro, is so organized and like so accurate, and it's just like it's just really good. I would really recommend you to watch this video if you want to start off. Like,
Yeah, I'll check it out.
You have to, bro. I'm telling you, you're gonna be like, wow, like it's really helpful to watch.
What's the name of your channel again? Let me save it now.
Here, I got you. I'm just gonna send it. I'm just gonna send it in the chat real quick.
Okay.
Definitely interested in joining a one-on-one beginners course. I joined us and also much. Yeah, I understand, Gabby. Awesome. Yeah, so I actually I teach everyone. So it's not just I have people who are advanced. Like I had a student, Zach. She's been trading longer than me in stocks for 2 years, right? So he knows a lot more about like trading than I do. That's what I thought. Then I started talking about smart money and all that stuff. And he's like, "What is that? I don't even know what that is." And I have students who don't even know how to use TradingView. You're gonna laugh, but I did a TradingView tutorial for one of my students. You're talking about fresh and beginner. Doesn't even know how to use TradingView. She asked me, how do you draw these boxes? How do you draw these lines? So you're talking about, Gabby, like you're talking about like beginners of beginner. Like I have people from beginner to advanced, like, anyone, it's not, it doesn't matter.
That's dope, just because not a lot of people like to take the time to like teach.
No, if
like,
you're in the
that
mentorship,
far
like,
into it, you know what I mean?
yeah, I mean, listen, if you're
Awesome.
taking the time to learn, then I'm gonna help you, right? Like, I mean, that's, if you're making commitment to me, then I'll make a commitment to you, right? Like that's just how it is. I enjoy teaching people. Like it's I'm doing this right now. I don't have to do this. Like I don't owe you guys anything. You know what I mean? Like I'm just doing this because I honestly like to teach people new things.
So that you like it.
Yeah, I love it. Like I love to help people. So if you're a beginner, like that's awesome. Like if anything, it's good that you're a beginner because I want to take your hand and show you the right way to trade because I learned support resistance, I learned trend lines, I learned Fibonacci, RSI, MACD, crossover, divergence, but all this BS that the market does not go by. It doesn't work. None of it works.
Yeah, I tried to self-teach myself Fibonacci and I thought I had it down, made a bunch of money on gold, but then lost a bunch of money because it was just dumb luck. It wasn't like I actually had gotten the
trading plan. You need to have an edge. You need to know how liquidity works. I'm sure you're watching this stuff and you're like, what is he talking about? Equal highs, equal lows, order blocks. You're like, what is he talking about? Like, slow down, So I'm definitely, guys,
I'm used to Evan's chat, so if you've ever been in Evan's Zoom, like you're used to just being lost if you're a beginner.
I mean,
so I'm just
Evan, I'll catch up. Evan is not that good of a trader.
Really? I made some money. He's just really for advanced traders. Like it's not for anyone with a low account, in my opinion.
He just takes really like big plays, but like,
yeah,
I know a lot of people. I know he doesn't post his losses. Like I post my losses too. Like I just don't really subscribe to his teaching so much. I use liquidity and algo trading market maker
That's
theory.
why I haven't learned what works for me yet. That's why I'm just kind of like dipping my toe and everything. Evan's trading style didn't work for me. You know what I mean? Elliot's has worked for me. I made good money with Elliot's the
That's good.
challenge, you know. But he
Yeah,
did
yeah, I
admit
know.
that like once Pfizer runs out, he doesn't know how good he's gonna do just because Pfizer has been so successful.
Everyone is good in the bull market. This class is about
Which
to
I mean, I
end,
know it
but
happens in like trading.
this thing's about to end because I can't control the If you want to get a call with me after, then tell me and we can get on call right now if you want. Okay.
Okay,
If you want to
cool.
talk to me. Yeah.
For
But
sure.
just this video is about to end, and I have no control over it. So it's like because I only have 40 minutes. Yeah.
You're
Oh yeah,
good.
it's about
You're
to.
good. Just
Okay. So
I'm gonna message you on the Discord.
awesome. All right, Gabby. I'm gonna talk to you right now. So I'm gonna end this
All
call
right.
real quick and
For
yeah.
sure.